5 steps to fix and flip loan pre-approvals. Hey, what's going on, everybody? It's Jeff from the YouTube channel, Jeff the Mortgage Pro. Thanks so much for watching the videos today. Today, we're going to talk about fix and flip loans and how you would want to get pre-approved for something like this. Now, these are a little bit different than a traditional DSCR loan going forward. This is a type of loan. They're also called short-term bridge loans, where we're going to be able to finance the rehab budget of the property for you to be able to help you increase the value of it. And then you can either have an exit strategy of selling the property, or if there's enough equity in there and room and potentially a good rental market, you could refinance it into a DSCR loan going forward. So these are some tricky types of things that we can do to be able to help you find financing for fix and flip loans. So before I get into it, do me a huge favor. If you like these videos, please go ahead and click the like button down below. I'd love to get this message out to more people. And if you really like the videos, I'd love to have you as a subscriber to my channel. So thanks again for doing that. So, all right, let's jump into it. 5 steps to fix and flip loan pre-approval here. Number 1, check your investor profile. So lenders look for credit scores. Typically for these types of loans, we're going to need 680 credit score or better. So if you're below that, you need to improve your credit somehow. So whatever that means by paying off debt or, getting rid of late payments or whatever it might be to get your credit score up over 680, I need you to work on that to get it there. Okay. We need liquidity, and we need sometimes to have prior experience. We can actually do these loans without any experience. It just requires a little bit more down payment, a little bit more a little higher rate while we hold these loans, just because, we don't know what we're getting when we lend these types of loans to borrowers going forward. Okay. So just be aware of that. You can still qualify as a first-time flipper, but you might face like lower leverage as well. So things like a little bit more for down payment is what that means going forward. And then lastly, you need to be able to show that you can qualify for these types of loans. So what we're really looking at, again, we don't need any income documentation because we're looking to see what the potential future value of the property is. So we need to have you have enough money to cover down payment, cash to close, and then reserves, which is going to be a little bit more on our fix and flip / short-term bridge loans than it is on just regular DSCR loans. Okay. So number 2 step here is that we want to gather our financial documentation so you're ready to go going forward. Okay, so things like bank statements showing you have enough cash on hand for the down payment going forward. We don't need to have money for the rehab budget because that's going to be money that is going to be financed for you to be able to help you buy these properties and repair them going forward. So after you do a couple of these, just a little tip here, after you do a couple of these, we can get less and less for down payment. So investors or lenders start to trust you more once you have experience going forward with fix and flip or short-term bridge loans. So definitely going to need to close these things in LLCs. So you want to make sure you have an LLC set up, ready to go. The documentation we need for your LLC is going to be your EIN tax document. We're going to need your articles of organization, and we're going to need an operating agreement. If it's an established LLC, typically we're going to need something called a certificate of good standing. So you want to make sure you go to the state website in which you have the LLC filed to be able to pull that. It's usually like a nominal cost of $5 or $10, which is crazy that you have to actually pay for your own certificate of good standing. But here we are. And another thing that might help sometimes to run this by lenders is to maybe have a short bio or track record. Oftentimes we're going to ask for your investor experience and just a little template to put together. So if you have that in advance, it's always helpful, so you don't have to do it during the process. It's just one step that we can check off of our list before you actually apply for the loan to get a fix and flip loan. Okay. So number 3 step here for pre-approval for a property, this is most important. And the reason why I say that is that DSCR loans, when we do a fix or a pre-approval for those, we're generally pre-approving you as the borrower because we're looking at your down payment, cash to close, and reserves, and we're able to kind of choose a purchase price based on that. And so it's a very general pre-approval. With pre-approvals for fix and flip / short-term bridge loans, it's a little bit different. We're actually looking at the property itself. So we need to know what the address of the property is. We need to know what the purchase price of the property is, how much money you're going to be putting down, typically at least 20% down, sometimes a little bit more. And then we want to know how much the rehab budget of the property is going to be. And then we want to know what the a potential after repair value of the property is going to be, because that's going to determine our exit strategy on these types of loans. So it's very, very important that we identify, when you identify a property that you might want to try a fix and flip loan on, that you let us know those types of details so that we can determine if that's going to be a good fit. And usually it is. Sometimes we might have to put a little bit more money down to begin with. Maybe you need a little bit more money in reserves. But in general, those are the parameters that we're going to need to determine if it's a property that's worth, if the lender's willing to lend you the money on that type of a property. Okay. So number 3, most important step, identify the property and figure out kind of what the budget is for this type of thing. Number 4, like I said, in step number 3, we're going to have to estimate what the after repair value is. Now, this can be really, really hard to do, especially if you don't have any experience in doing this. So as lenders, we're going to rely on typically the appraisal to determine what the after repair value of the property is. But if you have a real estate agent that can give you some comparable sales in the area to determine what the potential value of that property is going forward, that's a really good resource. If you have experience in doing this going forward, that's really good to be able to know that going in, because the better your numbers are, more buttoned up they are going into the transaction, there won't be any surprises when the rehab or the after repair value comes back where you want it to be. So having that idea of what the estimated after repair value is really important in the step in getting pre-approved for a fix and flip type of loan. And then lastly, you want to submit your application. Again, you're going to need like an application for this. So different lenders have different PDF applications. Some of them have electronic applications. We want to make sure that we send it to the appropriate fix and flip lender that we work with on a daily basis that can get these loans funded for you. We want to make sure that we have all the documentation we need going into it. So going back to the steps of number 2, getting all your documentation. When we're submitting it to a lender, we want to have everything up front, because these are underwritten differently than typically like a conventional loan is. With fix and flip loans, we gather all the documentation first, we get the appraisal done, and then it goes into underwriting. It's just basically a once through underwriting going forward. And then if there's any other small things we need to clean up, usually we don't have to clean up anything because we got everything, all of our I's dotted, all of our T's crossed before we actually submit it to underwriting. Then we're ready to close right after it goes through that underwriting process. The way that a conventional loan works is that you get as much documentation as you can, and inevitably you're going to submit it to underwriting, and the underwriter's going to say, "Oh, you need, this, what's this large deposit on your your account?" And so we're going to have to verify what that means. And there's more documentation and more back and forth, and then you get your conditions for it, and then you eventually submit it back to underwriting. So it's a two underwrite type of a process with conventional loans, whereas fix and flip is typically just a one underwrite and that's it, and we're done. So what that means also is that you can do these a little bit faster than you could like a conventional loan. So that's a benefit for you going forward, is you can potentially close these a little bit faster. So once you have a deal under contract, okay, we're going to move it through underwriting. We're going to make sure the property appraisal is done. We're going to make sure the rehab budget is reviewed. One tip also for the rehab budgets is that you're going to need a licensed contractor to do the renovation and take the draws on the rehab budget going forward after you close the transaction. Lenders just don't want the risk of having you do it by yourself, especially if you're a first-time investor. So make sure that you have a good general contractor lined up to help you out with these fix and flip types of loans when you're doing them. Okay, so those are the 5 steps that it takes to get a fix and flip loan, or a short-term bridge loan is another way to call it, and get you pre-approved for those. If you have any questions at all, please reach out to me. I'm going to put my calendar link down below in the description, and I'd love to be the one that chats with you about doing your fix and flip loan going forward. If you have any questions at all, please feel free to reach out to me. Have a great day, and we'll talk to you on the next show. Bye.